Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 4th, 2022. Let's talk about InMode. InMode is into medical devices. It's in the aesthetics market. They will make sure people look good with their procedures. They will make sure your skin and your body looks much younger. So with that, let's jump in and get started. So we will look at company overview, competitive landscape, review few charts, look at the financial summary and stock performance, and also compare InMode with other medical device companies like Penumbra, Edward Life Sciences, Intuitive Surgical, Abbott Labs, Align, WST, as well as Bruker. All my favorite stocks here. Let's compare. And then finally, let's have a verdict on whether to buy InMode here or should we wait? So with that, let's jump in and look at the competitive landscape. As you look through here, we got InMode at the top, solid performance. It's a top performer in all medical device stocks here with the big cap type names. Look, 177% performance in 1 year, and also they're doing great from a top line sales perspective. 1 year quarter over quarter sales are great. Look at the gross margin, highest in this list here, 85% gross margin and 46% net margin. That's also highest in the list. Only thing is their sales so far is small. It's a small company compared to many of the other companies here. So it's a little bit smaller company. That's why these numbers look much better, especially sales growth number looks much better with a smaller basis. And then you got a few more players here as you can scan through. Keep watching the gross margin and net margin and debt to equity ratio. Stocks like Cutera has got a little bit high debt to equity ratio. That tells you got to be a little bit careful, but it's a good long term play. Look, trading volume is a little bit less for Cutera, but it's a solid play. And we got a few of my favorites here. Keep watching Penumbra. It's again a little bit newer company, as you can see here. Doing pretty nicely. And look at the performance here. And sales growth, nice sales growth, and both 1 year as well as quarter over quarter sales growth here. Great gross margin. Net margin is 23%. And then you got some of my favorites here. As you look through, we got few companies like Abbott Labs, which is a steady eddy type company. You cannot go wrong with the Abbott Labs here. Great sales growth here, as you can see here, both 1 year as well as quarter over quarter. Nice gross margin and great net margin for Abbott Labs. And you got few more names as you can look through. All doing great. This whole medical devices market is really on the fire. I think all these companies do great. I would watch out for a little bit high debt candidates like Cutera. It's a long-term play, but a little bit higher debt to equity ratio at the present time, but still works. All these names are great here. No red flags on any of these names here. Now let's go into a little more detail and go from there. Let's look at few charts here and compare few companies. As you look through here, we got few charts. We got InMode here. InMode, as you can see here, off late is trying to struggling a little bit, as you can see. Look, stock has been dropping off late here. Look, there's a nice drop here. It's trying to bounce off of its 200-day moving average, as you can see here. And on the balance volume is pretty steady. I think at this time it's a good time to slowly start buying InMode, given it's dropped significantly from its high and also still putting upon solid numbers. That's why let's go deep dive into it. By looking at the chart, it looks like it's okay to start buying this company here. And then we got here Penumbra. Penumbra is again a good company. It's also in a tight trading range, as you can see here. Let's look at Penumbra also and see if it's worth buying here. It's also in a tight trading range here. Great company. I like this company. Look, on the balance volume is rising right now, and stock is also going higher, as you can see here. So at this time, I would say, given RSI 63, it's good to wait a little bit for Penumbra to come down here, and then we can buy Penumbra. Given stock has had a nice run here. And next we got here Edward Life Sciences, one of my favorite companies. Look, stock has gone up very quickly, and on the balance volume is also up. And as you look through here, RSI is around 61 here. I would say wait a little bit for Edward Life Sciences. I love this company, but keep watching here. It's got up and downs here, so I would wait for a little pullback here and let the stock come down a little bit around say 123 or say 120 level, and then you can buy Edward Life Sciences, which is a great medical device company. And finally, we got here Intuitive Surgical, one of my favorite company here. I would say same thing here. Let this come down a little bit. Given RSI is 59 here, little too high, but it's a great company. As you can scan through here, on the balance volume is rising. That's a good sign. So I would say wait a little bit for a little pullback in Intuitive Surgical, and then you can buy this company. So with that, let's jump in here and look at a few more players. So as you scan through here, we got a few more players. So we got at the top, we got Abbott Labs. Abbott Labs, as you can see, are doing great, nicely. It's above it's all the moving averages, the 200, 150, and 25. At this time, I would say wait for a little pullback in Abbott Labs. Given RSI 61, that tells you stock is a little hot right now. And also as we scan through here, on the balance volume is rising and now it's a little bit flat, so that's why I would wait for a little pullback in Abbott Labs. It's a great gangbuster stock here, steady eddy. I would buy this on a little pullback here. And then we got here Align Technologies, one of my favorite stocks. This is a great company. It will help your teeth look good here. A lot of people have made used their procedures to make their teeth look good, and they got a cutting edge technology. And as you look through here, stock is trying to see where to go, going up and down, as you can see here. And keep watching on the balance volume here, trying to stabilize at this time here. So I would say, on this one, I would wait for a little pullback and then buy. Given RSI is 51 here, you could moderately buy also, but you can buy on the down days here. It's a great stock for nice growth. And then we got here WST. WST is also a great company. Look, stock has been going higher, and it's trying to bounce off of its 25-day moving average here. I would say it's a good one here. I would wait. I would slowly start buying WST here. Given RSI is 49, it's okay to slowly start buying WST here and keep watching on the balance volume, pretty steady here and going higher. So it's a great company. And then finally, we got Bruker. Bruker is also one of my favorite companies here. Look, it's in a tight trading range here. It's trying to come down up to about 100-day moving average. Look here, on the balance volume is going higher and stabilizing here. So that's why I think it's a great buy. RSI is 49. That tells you could still buy some Bruker here, a quality stock at these levels, and go from there. So with that, let's jump in here and look at the background of InMode. As you look through here, InMode, great company, a nice revenue growth, as you can see here, $94 million in revenue and 86% Q3 growth here. That's a very good growth number. And they got nice net income, companies making money, and lot of installed base here. 10,000 units installed, 5,000 US installed base here, and selling in 70 countries, and they want to expand further, and they got some direct sales rep to sell their devices, and they got a lot of patents and proprietary technologies. So with that, from the numbers perspective, looks great. They're making the right strides and really taking on the market and going from there. So with that, let's jump in here and look at a few more details. So as you look through here, we got Bruker. So we got InMode. So we got, if you look through the industry, what's going on in the industry, there is a paradigm shift going on, as you can see here. So in the past, we have this traditional laser-based aesthetics, and they will help to remove some hair, and they will do some non-invasive laser procedures. So it's very limited, and it does certain things, but not a complete solution. That's where InMode comes in. InMode is really minimally invasive aesthetic surgery. They can look at your complete entire body, and they can see where they need to make you better. It may be your belly, it could be your hips, it could be your chin, and they will make sure those procedures are taken care of. And they will look at significant longer lasting results, not just one time hair removal type procedure. And they will also look at your entire body. They will look at the body contouring, not just laser rejuvenation. That's why, as more and more people are trying to look at their complete body and make sure they look good aesthetically, that's where InMode comes into play. And the traditional players like Cloterra, Luminous, and all these folks, they did very well in the laser surgery in some specific areas. But if you want a complete solution, that's what InMode offers. That's the future. So with that, let's jump in here and look at some more details. So as you look through here, InMode, a great company. They're into minimally invasive aesthetic medical procedures and their medical products. It's used by a lot of these doctors, and they got proprietary RF, radio frequency assisted liposuction. This is where folks really get benefit from their proprietary technology here. And they're into skin tightening, body and face contouring, and various other things. As you can see here, companies are doing great. And stock price is around 65 here. It used to be much higher. It came down nicely, and the market cap is about $5 billion. Still a relatively small company compared to other medical device companies. And from a stock perspective, as you can see here, stock has been struggling a little bit off late. As you can see here, we got stock coming down off late, and right now it's trying to bounce off of its support level here. That's why I think at these levels it may be good to look at this company here and slowly buy into this stock. Look, there is a nice trading range here. It's trying to bounce off of its support level. I think that's where we got to take a look at this company and slowly buy, given they got a nice market going forward. And as you look through here, they got a nice analyst recommendation of a strong buy here. We got 5 analysts saying, go buy the stock at this time. No hold and no sell at the present moment here. And as you look through here, we got a 10 bagger in the making. So according to this Motley Fool article here, in 2 years this can become a 10 bagger type stock here. We'll take a look at that and see if that works out. But overall, it's a good play here. Stock has been dropping off. Yesterday it dropped by 4.81%. Let's see if it's worth buying here. All right, so let's look at a few more details. As you look through here, from a analyst projection perspective, from a price target perspective, look, we got multiple price targets. The lower target is about $85. Stock price is currently around $65. That's a $25 higher than the current price, and the high estimate is around $103, much higher. So as you can see here, we got multiple analysts contributed to this. We got 5 sell side analysts here. They all came up with this 12-month price projection. I think conservatively, I think stock, given it's at $65, it's got a nice headway to go forward. So with that, let's jump in here and look at the stock in a little more detail. As you look through the leadership here, we got the CEO, co-founder and CEO here, Moshe. As you see here, he co-founded this company back in 2008 here. He's the CEO as well as chairman of the board of directors. And this CEO here, Mr. Moshe, has been a serious co-founder. He co-founded multiple companies. As you can see here, he co-founded this company here. And he's also in multiple other companies. Look, he's Chief Executive Officer of Home Skin Innovations, and he's also in the board of directors for multiple companies, as you can see here. And looks like he's basically a aesthetics and skin and in the medical industry for a long time. He's got all this great exposure in the medical industry. That's why CEO checks out here. He's got relevant history, relevant background. He can make the company work. And as you look through here, 75% of the employees approve the CEO here. That's a very good accolade. We got around 25, 27 ratings here. I think CEO checks out. He's got relevant experience in this market, and he knows how to lead the company. So with that, let's jump in here and look at the ETFs with the exposure to InMode. As you can see here, we got various ETFs with lot of exposure to InMode. Look, we got Fred ALGN Management. We got around $126 million in investment in InMode, and we got few more. As you can see here, nice 1 to 125 million investment, 102 million investment, and even bigger companies like BlackRock has got 77 million investment in this company. So overall, looks like there is a good interest in InMode. Given it is a solid growth stock, folks want to buy into this company. And if you look at general performance of medical device ETFs here, we got IHI, which is one of the bigger ETFs by net assets, about 8 billion. Look, it's done nice. For 1 year, it's done about 20%, but for 5 years and 10 years, it's done great. And same story with XHE. It's SPDR, S&P Healthcare ETF here. It's also done great. 5 years, 143. 10 years, 447. In the 1 year, I think both these have struggled a little bit. That's where we have to look and see if it's worth buying these stocks here. So with that, let's jump in and look at this company in a little more detail. So from a deep dive perspective, let's quickly walk through this. As we look through this here, we got InMode. From a snapshot perspective, as we see here, it's a strong buy from our analysts, and stock price is around $65, as you can see here. Nice $5 billion market cap. It's not too big, not too small. Has a lot of room to run. As you see here, we got IPO back in 2019. Not a very old company, pretty new company. In last 52 weeks, it's done nicely here. As you see here, from 52-week high, it's down 33%. That's when we look at the company and see if it's worth buying. We don't want to pay top dollars. We want to buy the company when it's down and pulled back a little bit. And price target right now is 98. Look, current stock price is 65. Price target is 95. That tells you that it's a nice $30 in appreciation here. And relative volume is really high at this time. Given stock has come down, I think a lot of trading is going on in this company here. 2 million shares traded. That's a very good number. And next, as you can see here, let's also build this quickly. All right. So next, let's look at a few more things here and go from there. Now we look at sales and margin. From a sales and margin perspective, nice sales growth. I like this quarter over quarter sales growth, nice 57%. Also nice year over year sales growth. Many companies cannot put up this type of sales here. And I love the margins. Look at the gross margin, 85% gross margin and 46% operating margin. And net margin is also solid here, 46%, and also nice EBITDA margin. Very few companies can put up this type of margin. That's why it's one of the great players here. And as you look through here from a PE ratio perspective, is 40, a little bit high. But for in the medical devices industry, it's pretty not too high compared to the industry itself. And PS ratio is 16, which is also pretty good here. Valuation perspective, not super hot, compared to the medical devices industry. As you look through here, from an earnings perspective, it's a company is making money. They show earnings and nice EPS growth for this year as well as next year. That's good. Analysts are projecting a nice growth here, and also sales growth is also good here. for next year, 22% sales growth. That tells you analysts are expecting this company to perform well even into the future. And from a financial perspective, as you can see here, very low debt here. That's a good sign here, just $4 million in debt. That's very good. This company can weather any downturn because they don't have too much debt. And as you look through here from a cash flow perspective, positive cash flow, and also from a Piotrowski F score perspective, it's 6. That tells you their books are improving in the last few years. Not bad at all. Their accounting and finance is good. And as you scan through here, free cash flow positive company, that's always good. And as you see here, nice return on equity and return on investment, that's a double digit. That tells you it's a solid company, profitable company. From a performance perspective, this is where we come in, look for last 1 day and even 5 day, 10 day, and even 1 month it's negative, and even 3 months it's negative. So that's where we have to look at the company. As the stock is pulling back a little bit like this, we have to jump in and see if it's good to buy as the stock is selling off here. But if you look through the longer term performance here, longer term story is intact. Nice 6 month performance here, and 1 year as well as 2 year performance is solid. That's where we got to see when the long term thesis is good. If there's a short term weakness, that's where we jump in. And as you look through here from an industry rank perspective, it's got a nice profit rank of 1 in the industry compared to other medical devices companies here. From a profitability perspective, this company gets a rank 1, which is highest. And from a technical perspective, RSI is 37, tells you stock is sold off. Money flow index is 50. That tells you it's in the middle of the road here. That's why it's good to take a look at this company, given it's sold off in the short term. IV percentile is 48, tells you can sell some put options underneath the stock price if you're into options. Otherwise, you could buy the stock outright here. And nice stock movement here. Last 14 days or so, you get a nice $4 movement up or down in the stock. Tells you it's a living, moving stock here, not stuck, not stuck and not moving at all. And from a moving average perspective, stock just came below its 10-day moving average. I think that's where we got to take a look and see if we can buy into this weakness here. Still above its 25th day moving average, but below its 50-day moving average as well as 200-day moving average. So one thing I always look for is companies below its longer term moving averages, but slightly going above their shorter term moving average. That tells you companies are trying to have a positive bias, trying to go take on its shorter term moving average, even though it's below its longer term moving average. And look from a grade perspective, from Morningstar, gets a B grade in the financial health, gets a A grade in the growth health, from a C grade in the profitability health, and Altman Z score, which is one of the great score when it comes to financial health of the companies. Gets a nice 53 here. That's a very good grade. So overall, from a snapshot perspective, in a nutshell, I see a company doing solid from a long-term perspective, and it's having some short-term, temporary weakness here. That's when we can see if we can buy this company into the temporary weakness here. So let's jump in here and look at a few more details here. Let's look at the numbers. From a numbers perspective, as you can see here, I love the trajectory here. Look, earnings per share growth did nicely in the past year. Now they're kind of flat. This is a year-over-year view. Now it's kind of flat, as you can see here. That checks out here. That's a good earnings per share number here. Let's also quickly build this so you can look at some of the titles here. All right. So next, let's look at a few more things here. So now we have sales number. I love this sales clip. As you can see here, sales is at a nice clip. It's going higher year over year. These are all annual numbers, as you can see here. That tells you company is growing. They know they are growing the top line growth. That's a good news here. Stock outstanding perspective, as you can see here, it's increasing slightly from 2019 to 2020. it's not a concern for me at this time, given they're growing their annual sales nicely here. Little bit bump in the shares outstanding is not a big deal at all. And from a quarterly revenue perspective, nice uptick here. That's good here. Nice trajectory. And they're also spending pretty good amount in the R&D, pretty flat in the R&D spending. That tells you company wants to make its product much better. And from a net income perspective, it's a good trajectory here. Their net income is going higher nicely. That also tells you company knows how to grow the top line. As you look through here, top line growing here, and also bottom line when it comes to the net income, it's also growing nicely. So that's why overall I think company knows what it's doing. They got a solid leadership. They got nice top line growth as well as efficiency in the operations and the bottom line. So with that, let's jump in here and look at InMode on a quarterly basis. As you scan through here, let's quickly build this so we can quickly walk through this. All right, so as you look through this here, InMode right now, as you scan through, stock price is about $65, market cap is about $5 billion. As you look through here, look at the market cap through the quarters here. It's been doing nicely. It's been increasing. As you can see here, it was 687 back in 2019, slowly got increased, and now it was at $6 billion. With this drop here, it's about $5 billion. And stock price also, as you can see here, increasing nicely here from $10 back in 2019 to current value, which is $65. So that tells you this company is growing its market cap and is taking the market share from other companies and growing its market share. From a sales perspective, this company knows how to surprise Wall Street. Look here, we got sales and sales surprise here. Nice sales surprise, and it's been surprising Wall Street positively on the top line revenue number. Very predictable. That's why Wall Street loves this company. I think that's why it's doing nicely. And from an earnings per share perspective, as you see here, it's also surprising on the earnings per share perspective. Look nice, 97% earnings per share surprise. So that's why Wall Street likes the earnings surprise. I think last quarter they have done in line, but overall they're doing nicely. There is no negative earnings surprise off late, even though in the past they had some negative earnings surprise around the COVID-19 time frame. They struggled a little bit because people did not want to go to hospitals for any medical procedure at that time. From a cash perspective, solid cash here. They're improving their cash position. That's very good. Many companies take on too much debt, but this company is very prudent. They don't have too much debt, just $4 million, as you can see here. And from a free cash flow perspective, positive free cash flow company, and operating cash flow is also positive. That's a great news. I love this gross margin. It's a small company, a nice gross margin. As the company grows into bigger company, I think it will be difficult for them to keep up with this gross margin and net margin. We'll see how it goes. But right now they're doing great from a gross margin as well as net margin perspective. Consistent R&D spending, that's always good. I like this R&D spend here. Companies making and spending money on the R&D. I love this ROA and ROE here. Great here. I love to see double-digit return on assets and investments and equity. This company doing it. That's a great ROA and ROE. And from an earnings perspective, we should look at earnings price per sales for these companies. Not too bad here. After this drop here, it also dropped a little bit below this year. Right now, it's about 16 or so. I think overall, this checks out here. Company doing nicely. In a nutshell, it's growing its market cap, growing its surprising Wall Street on both top line revenue as well as earnings per share perspective. It's surprising. Wall Street loves predictability. This company is giving it, even though sometimes they can give a little bit lower forecast. So with that, company checks out here. They're doing great quarter in, quarter out. And next, let's look at the performance of InMode and see what we can make out. As you see here, it's doing great. Let's quickly build this out here. So as you can see here, companies doing nicely from a performance perspective. Look, from an annual performance perspective, they have done 197% last year, but last in 2019 it's about 21%, and same story in 2019. 2019 is when it started. That's why it's not a full year. And on a monthly performance perspective, it's done great. As you can see here, in the past it's got some down months. Look, March last year with the COVID scare, stock came down big time, but it bounced back nicely and went higher. It was $16 back in those days. It's a steal, and now it went up nicely. As you can see here, hit about 97 $94 back in October. After that, it's struggling a little bit in the last couple of months. As you can see here, November, December, even January so far, it's down. That's when we can jump in and see if it's worth buying here. And from a monthly performance perspective, as you see here, it's actually weekly performance, not monthly. From a weekly performance perspective, it's been struggling for past couple of weeks. As you can see here, down big time after the quarterly earnings. That happens. I think company gave a little bit tad lighter guidance here. Huge drop, as you can see here. It's been trading sideways after this. So I think at this time, it's okay to slowly take a look at the company and see if it's worth buying here. And from a daily performance perspective, as you can see here, it's been struggling a little bit. It's been up and down in the trading range. Look at the volume here. Yesterday, after the drop, we got a nice volume here. 1.3 million shares traded yesterday. So that's why we got to take a look at this company and see if we can buy this company at these levels here. So this is weekly. All right, let's look at some more details. In a nutshell, I think company is doing great from a performance perspective. It's got some temporary weakness at these levels. That's where we got to investigate and see if it's worth buying here. And from a stock chart perspective, we got a chart from Thinkorswim here from TD Ameritrade. Look, stock has been doing great here, nicely up trending, as you can see here. But off late, last couple weeks or so, stock has been stalling, as you can see here. So this is where we have to jump in and see. One good thing is right now it's getting some good support here. It's trying to go higher. So this is again a weekly chart here for last 5 years, even though the company started just back in 2019. So in a nutshell, company did great after the COVID in 2020. Stock price went higher. Right now it's came down after the quarterly earnings. As you can see here, after the earnings here, stock is trying to stall a little bit. So that's where we got to jump in and see, is it good to buy given it's an earnings related drop here because of the softer guidance. And next, let's look at some more details here. Let's look at a daily chart for last 1 year. As you can scan through here, stock has been performing pretty nicely in 2021, and right now it's struggling a little bit. As you can see here, it's in the tight trading range here. That's where I think that's a good support level here, maybe around $60. That's a nice support level. Let's see if we can see what we can do here. As you look through here, I think that's a good support level. It's trying to bounce off of around $62, $63 or so, and try to go higher. And as you look through here from a RSI perspective, momentum is kind of trading sideways right now. It's trying to decide where to go here. I love low RSI. Look, RSI is 37 here. Tells you stock is sold off here. That's where we jump in and see if it's worth buying here. And from a implied volatility perspective, IV rank is pretty high at this time, around 46. I think it's okay to sell some put options if you're a put option type person. You can make some money given IV rank is around 46. And as you look through here from a DMI perspective, which is one of my favorite indicators, right now it's bearish. Look, the red line is going higher, as you can see here, and blue line is going lower here, and the distance is pretty significant between those two. That tells you at present time the stock is bearish. And from a on the balance volume perspective, look, there is a nice uptick here. That tells you people are slowly buying into this company here. That's a good trend. And check in money flow perspective, smart money is flowing into the company here nicely. I think that's also a good indicator. So overall, from a technical perspective, what we can make out right now, stock is in the bearish technical territory here. That's when we can try to see if it is worth slowly buying some stock here, given it's a bearish territory, and go from there. So let's look at the option chain here and see what we can see. As you look through here, we got InMode. Look, we got stock price around $65, as you can see here, and all-time high for the stock is around $99 in last 52 weeks. And currently, as you look through the option chain here, we got $65 strike price. Look, there is a 93 open interest. That tells you folks are interested in the stock at the current strike price also. And people are also buying, the lower strike price call options here, as you can see here, 57.5. And also, folks are buying a lot of higher strike price call options here. Look, there is a 676 contracts traded at $85, which is $25 above the current stock price. So that tells you folks are interested to buy the call options, even the out of the money call options for this company by paying around, say, $3.90 or so. And look, we got a call, we got the put here. On the put side of the house, there is not too much open interest here. As you see, there is some open interest, as you can see here, but nowhere comparable to call side open interest, as you can see here. Even there is some open interest on the put side, maybe around, say, 47 or so. That's a good interest level here, or actually $50. But if we compare them, total them up here, we got more call open interest than put open interest. So with that, let's get a quick snapshot here on the open interest and go from there. All right, so this will give you a good idea. If you look here, total call contracts traded here 4,189. Total put contract traded is 1,604. That makes the put call ratio around 0.33. That's a completely bullish here. That tells you there are more people betting InMode will go higher. And look, we got InMode stock price around $65 with a nice pullback yesterday. And VWAP is around 55. That tells you in the shorter term, this stock can go a little higher from here. So overall, it's bullish in the Wall Street, in the option market. People are betting the stock can go higher. So with that, let's jump in here and look at historical performance of InMode compared to other players in the industry here. As you look here, we got a few of these companies here. Look here, we got InMode right here, stuck in between here. Nice performance in last in 2021. 2020 also did good. Even 2019 it did okay here. That's when it started. Overall, it's okay. If you compare it to the other players like Abbott Labs, Abbott is one of my favorite here. They're doing nicely, as you can see here, but performance is nowhere closer to InMode. InMode being a smaller market cap company, around $5 billion. It's been putting up a great performance, as you can see here. But you could argue InMode 177% in 2021. Very hard to beat this again. That could be the scenario. That's why stock is pulling back a little bit. After it came back, I think it may be worth looking and seeing if it's okay to buy at those levels here. And then you got here Edward Life Sciences, one of my favorite companies. It's also into medical devices. Look, this one is putting up nice sales, nice performance year after year. As you can see here, 40% in 2021 and nice 17% in 2020 and so on and so forth. This is a solid operator. We could look at Edward Life Sciences also, being a solid player here. And we got one of my favorite here, Align Technologies. Again, a solid player. It's been putting on nice performance, as you can see here. It's been there for much longer. Look, nice 21% performance in 2021 and 91% in 2020. And then you got a few more players like Intuitive Surgical, which is one of my favorite. It's also putting up on nice performance here, year after year. That's a solid operator here. And then you got a few more, as you can see here. Penumbra, Westbrook, all are doing great in 2021. Also did great in 2020. So I think this is where the moment you see this type of chart, it will help you to understand how the company has been doing in the past and what it might do in the future. By looking at this, I would say InMode has done great in 2021, and that's why it's trying to pull back a little bit in 2022, so that way it can have even a little more performance as you go forward. So that's why companies like which are putting up on very nice growth in the past year, typically they tend to slow down a little bit and try to search for direction before they accelerate. That's why it's worth looking at InMode here. Given it's dropping off a little bit, that will give us a nice entry point. We could slowly start scaling into InMode and take it from there. Next, let's look at compare some of these companies here, like InMode, AdWords, Life Sciences, and so on and so forth. Look, InMode, solid operator here, and strong buy from analyst perspective, and nice 3-month volume. On a nutshell here, look at the financial health, gets a B grade here, and nice A grade from a growth perspective, and C grade from a profitability perspective. And we got Penumbra here, again a strong buy from a market perspective. Nice revenue growth, as you can see here, doing great. And they also get a nice grade here, a nice financial health grade, which is A, top notch grade here. And they also get a nice grade, B grade in the growth, and D grade in the profitability. So let's do one thing. Let's quickly compare these companies and rank them, so that way you have a good idea. So with that, let's jump in here and rank them. We can talk through them as we rank. So number one is Abbott Labs, as you can see here, mainly because if you look at Abbott Lab here, solid A grade in the financials and solid C grade in the growth here, and they get a B grade in profitability. Company has been there for a long time. As you can scan through here, 1 year return, 2 year return, 5 or 10 year, just been outperforming year over year. That's why it's a solid operator here. And number two, we have Edward Life Sciences. Keep watching here. It's again a solid player here. It's a buy rating right now, and nice A grade in the financial health, and B grade in growth, and gets a C grade in the profitability. And number three is WST here, and West Lab is also a solid player, gets a A grade in the financial health, as you can see here, and C grade in growth, and also profitability. From an industry rank perspective, it's a top rank, as you can see here, number one industry growth rank. And finally, we got number four, Intuitive Surgical, which is one of my favorite here. As you see here, it's done great from an industry rank perspective. It's number one from a growth perspective. Solid financials, top rate here, A. Growth is great, and profitability is C. And next we got your Brooker. Brooker is again a solid player. Look, Brooker, a nice A grade in the financials, and C grade in the growth, and C grade in the profitability. And then you got Brooker got repeated. Ignore that one. Number seven, we got Penumbra here. Keep watching Penumbra here. Solid A grade here from a financial health perspective, B grade in the growth, and a D grade in the profitability. And number eight is InMode. As you can scan through here, InMode is a solid operator. As it's a B grade in financials, A grade in growth, and a C grade in the profitability. So with that, as you can see here, InMode is doing great. Only reason it got number 8 here is because they have to improve on their financials a little bit, and profitability also. And company does not have too much history. It's just about 2-year-old company here. They have to improve their as they put on more performance. I think it'll become better. But right now, given they don't have too much performance here, it's a little bit early to grade them higher. So with that, I think only thing we missed here is Align Technologies. As you can see here, Align is a solid player here. I would put them up somewhere number 6 or 7 here, and go from there. I would say align is right here. Number 5, it's a solid operator. So with that, what we'll do next is we'll see if it's worth buying InMode here. As you look through InMode, it's a solid operator. It's a leading innovative provider of minimally invasive aesthetic wellness procedures. There is a lot of demand for these type of procedures. A lot of folks want to look good quickly, and they opt into these type of procedures here. And this company has been soft launching their radio frequency procedure here for the surgical, minimally invasive surgical technology here. That's a catalyst for the growth for the future, and this will help with the tissue remodeling, which is going to be future for them. There is a lot of demand for this technology. And total revenue perspective, nice 58% revenue growth, as you can see here. That's great. And they're also increasing revenue using these aesthetic procedures. That tells you these procedures are really helping people. And there's some issue with the supply chain. They're recovering from their supply chain and managing the supply chain nicely as they go forward. And they operate in 72 countries right now, and they want to expand into new markets. That's telling you, companies not keeping quiet, they're expanding. That's always a great one. And right now, I'm recommending a moderate buy. So don't buy huge quantity here, mainly because I feel, their gross margin is 85% right now. As they go forward, there will be some pushback, or there will be some pressure on the gross margin. If they execute well, if they expand nicely into other areas and other markets, I think they can grow well. But given stock has already ran up around 170% or so last year, and given there is a very, very high gross margin, there may be some pressure on the gross margin. That's why I recommend moderate buy here on the pullbacks. Right now at this time, you could buy a small position here, watch the stock, and buy slowly in the pullbacks. That's why I think it's a great stock here. I'm buying slowly and adding to my position. Has a long term growth opportunity. There is some short term weakness. We can slowly buy on this pullback. So with that, thank you very much. Happy investing and trading. Please subscribe.